Good afternoon, all of you. So today we are again for the fourth chapter of survey. Fifth, I had already uploaded, doing it on the Sunday. Today we are doing the fourth chapter, which is on external sector. So when we talk about external sector, survey begins by saying that the global economy is undergoing shifts away from globalization. So what is happening is with a lot of changes in the global economy that we have observed, what we have observed is that now countries are becoming very conscious about whom they are trading with, how they are trading, how the supply chains are being developed. So that is why we see that survey also highlights that, saying that now the countries are increasingly prioritizing domestic supply capacity कि अपने देश में ही बना पाएं rather than and reducing dependence on global value chains. Why? Due to weaponization of trade. Weaponization of trade, like tariffs imposed by Trump, or like China stopping the export of rare earth permanent magnet, or China stopping the export of microchips of certain types. So that is weaponization of trade, that using trade to achieve geostrategic objectives. So many countries are at a low level of confidence today, so nobody wants to take the risk of being dependent, and that is why the trade policy uncertainty and global economic policy uncertainty indices are showing very huge fluctuations. Also, we see that even though Trump's tariff pressures have gone down, there are arrangements, the Supreme Court of USA has ruled against it, but still you will see the threats coming in. We see the Iran-US-Israel war. We also see at a low simmer Russia-Ukraine war. And then there are skirmishes like Afghanistan, Pakistan, Thailand, Cambodia. So the lack of peace in the world is creating difficulty, uncertainty for trade and investments also. Also, for India, there is a challenge. There are opportunities, there is risk, but the challenge is that we are in a stage where we would have loved to have a peaceful world. अगर दुनिया थोड़ी पीसफुल होती अभी तो इंडिया के लिए बहुत अच्छा होता, क्योंकि हम टेक ऑफ कर रहे हैं, हाई ग्रो कर रहे हैं, फास्ट लेवल पे हैं. तो अगर हमें एक पीसफुल वर्ल्ड मिलता तो अच्छा होता, बट राइट नाउ वी हैव द चैलेंज, द वर्ल्ड इज नॉट पीसफुल, द वर्ल्ड इज नॉट कोऑपरेटिव, सो इंडिया विल हैव टू नेविगेट विद इन दैट. सो सर्वे सेज देयर आर थ्री चैलेंजेस: ट्रेड पॉलिसी अनसर्टेनिटी and protectionism. Protectionism is of two types here: high tariff barriers, कि आप tariff ज़्यादा लगा दिए, and then non-tariff barrier. Non-tariff barrier is where I'm not increasing the tax, but I'm creating multiple types of restrictions, like environmental related restrictions, like a carbon border adjusted management tax done by European Union. So these are, or UK, these are non-tariff barriers. Then decoupling among major economies. What is strategic decoupling? Decoupling का मतलब lack of dependence on each other. Strategic decoupling is realizing that politically we are not aligned, so economically we will not be aligned. So Americans trying to decouple themselves from Chinese supply chain. So you will see that they are creating a Pax Silica. Or Chinese trying to decouple themselves from American financial system. So they are creating CIPS, for creating an alternative to SWIFT. So this is about decoupling on strategic purpose. Then of course there is trade as a tool for national security, that making sure that trade becomes a tool to achieve strategic gains. So survey says that this is now creating the semiconductor supply chain, critical minerals, telecom infra, pharma inputs. Everywhere the countries are taking steps to make sure that they become less and less dependent on others. And of course the energy trade, Russia-Ukraine war, Israel-Iran war, all that is showing energy trade is reconfigured again. BRICS is expanding. So you will see that the BRICS has now been expanded. Saudi Arabia, Ethiopia, Egypt, Iran, they are all countries which are joining BRICS. So that shows some expansion that BRICS is now showing. Then of course, apart from that, we also see Quad being formed, So, countries are coming together less on the basis of multilateralism, but on the basis of personal interest. Of course, the globalization is still there, but now the focus is not cost efficiency, the focus is strategic efficiency. Nearshoring, outshoring, these are being practiced. So nearshoring का मतलब क्या हुआ? Nearshoring का मतलब होता है, जैसे आपने कहा, modest improvement in nearshoring. Create production units near the country. And friendshoring is create production units in friendly countries. You know, in one line, Paul Romer has said this. He's a Nobel Prize winner in economics. He says efficiency in supply chain, कि जो कंट्री सबसे एफिशिएंट है, सबसे सस्ता बेचेगी, अब उससे लोग नहीं खरीदे, जरूरी नहीं है कि उसी से खरीदेंगे. सो एफिशिएंसी इन सप्लाई चेन इज रिप्लेस्ड बाय सर्टेनिटी इन सप्लाई चेन. कि भले ही आप सबसे सस्ता बनाते हो जैसे चाइना, लेकिन अगर आप सर्टेनिटी नहीं देंगे मुझे, तो फिर मैं शायद आपसे ना खरीदूं. So we see that friend shoring index is rising as we see that happening. Near shoring is not happening as much, but friend shoring is happening, and trade concentration, if you see, is going comparatively downwards. Then similarly, the global trade performance, if you see these graphs, the global trade performances show that the trade restrictive measures are now becoming much higher in the post-COVID world than trade promoting measures. ये जो green है वो trade promotion है और जो red है वो trade restriction है. तो हम देखते हैं कि ये trade restriction और trade promotion measure almost एक दूसरे को match कर रहे हैं, which shows that now the global trade policy activity index that IMF brings up, you know, developed by economists from WTO and IMF, it shows that the index was stable in 2010 to 20, but has now been very volatile. You know, so that is mainly because of US-China tensions, COVID pandemic, Russia-Ukraine war, Israel-Hamas war. So we see a lot of fluctuations, and all that is creating a challenge for global trade. Then of course, we see that the uncertainty is at a historical high, the indices are showing massive fluctuations, and that is because of industrial policy activism. So these are reasons for volatility. क्यों ट्रेड सिस्टम में इतनी वॉलेटिलिटी है? अब इंडस्ट्रियल पॉलिसी एक्टिविज्म का मतलब क्या है? कंट्रीज यूजिंग गवर्नमेंट सपोर्ट, जो बिल्कुल WTO के खिलाफ है. WTO ideally doesn't support it, but countries are using government support to protect and promote their own firms. So that is one challenge. Then competition over critical minerals. You will see India, USA, China, European Union, everybody is trying to create a supply chain where critical minerals are not in shortage. Concerns about trade imbalances, deficit, koi country nahi chahti, so deficit is not welcome, and unilateral policy actions like ek dusre pe tariff laga diya, ban kar diye, and so on. So now the bilateral agreements are happening, but multilaterally we are in trouble. Now they say trade front loading. Front loading is doing future business, doing future business today. You know, जो फ्यूचर में बिजनेस है वो आज कर लें. जैसे ट्रंप ने जब टैरिफ का थ्रेट दिया, and when Trump said that by July I will increase the tariff on every country, so he of course said it to negotiate the deal, but then every company started pre-purchasing, initially booking things, so that by the time tariffs come, at least this year की चीजें तो खत्म हो जाए. That is front loading of trade. तो इसीलिए ट्रेड देखने में कम नहीं लगा इस साल. Trade doesn't look less to this year compared to last year because companies could front load it, because Trump tariff took August, September to be implemented. But then otherwise we see that if the trend continues, we may have trouble in future, in future economy system. Then of course, what about India's trade performance? So we see that at the moment, India's integration has deepened and there are strong export growth that India is showing. Services trade is pretty resilient. We will talk about it in detail in some time. And diversified trade partnerships. So, we have had this trade agreement with Oman, trade agreement with New Zealand, trade agreement with European Union, trade agreement with, EFTA, European Free Trade Association, trade agreement with UK. So we have had trade agreements with multiple countries now. Before that, we had already signed trade agreement with UAE, trade agreement with Australia, with Mauritius. So that way, India is trying to integrate itself with rest of the world by making sure that we have enough trade agreements at bilateral level, so that even if multilaterally the world chokes, we have enough capacity to integrate ourselves with the global system. Then of course, India has shown one more good thing. Non-petroleum merchandise exports are showing a rising trend, which means that Indian manufacturing is now getting more traction in the world, and India's service sector, especially knowledge-based sector, are getting more traction globally. Apart from that, we see that between 2005 and 2024, India's share in global trade has increased. So from 1% to 1.8% goods, ये prelims के point of view से याद रखोगे, prelims में पूछ भी चुके हैं एक बार, फिर से पूछ सकते हैं. And from 2% service exports to 4.3%. So in the last 20 years, our share in global goods trade has doubled, services trade has more than doubled. So 1% to 1.8%, 2% to 4.3%. And India ranks third in the global south, in global south mind you, not globally, among developing countries in trade partnership diversity. China has maximum diversity, then UAE, and then India. ये याद रखेंगे, prelims के लिए important है again. And fourth in merchandise trade diversity. Our commodity trade has now become more diverse, but that is happening now after Trump's tariff. Before Trump's tariff, you recall 20% of our trade, 18.6% was to United States, 17% to European Union, 4% to Britain. So before Trump's tariff, almost 39-40% of our trade was to European Union, Britain, etc. Now it is a much better scenario that we have. Then, of course, when we look at recent trade performance, our export growth was $825 billion last year. In this, $437 billion was goods and $388 billion was services. That is very important. It shows services are gradually catching up with goods trade in India, and service exports are continuously growing in double digits. Our imports are $919 billion. That's around $650 billion of goods, a little more, $700 billion of goods, and around $210 odd billion of services. Then, of course, trade deficit was $97.4 billion, but this trade deficit came out to be much lesser because service had a trade surplus. तो goods में हमारा trade deficit है, लेकिन services में trade surplus है. In fact, the current account deficit remained only $84 odd billion because the remittances counted for factor income flowing abroad. So overall, the current account deficit was very much in control in India last year compared to normal what we see. And that is, so if somebody asks you a question, what keeps the current account deficit low in India? Two reasons: high trade surplus in services and high inflow of remittances. These two things keep current account deficit relatively low in India. And this year survey gives us April to December. You have $634 billion of trade of goods plus services, and imports is $730 billion. Now, in goods now, April to February, we have the data. March data, of course, we will get on 15th April. April to February, we have the data. And our goods trade is already touching around $35 odd billion, goods plus services exports. And imports are already touching around $900 odd billion. So we are expected to surpass last year in terms of goods and services. तो अगर हम April to February की बात करें, तो $802 billion exports is what we have already reached, and approximately $870 billion imports is what we have reached. There can be minor variations in government estimates because different portals give you different estimates, and services को update किया जाता है एक महीने बाद. तो एक महीने बाद हमें और बेटर डेटा मिलेगा, बट अभी के डेटा ब्रॉडली ये कहते हैं, और ये पूरे साल भर का डेटा नहीं है, ये अप्रैल टू फरवरी तक का डेटा है. And then of course the trade deficit this year is slightly higher than previous year, but overall we are doing much better given the uncertainty that the world is going through. So this is the overall trade balance data that I have given to you in a chart. Then if we look at merchandise trade, as I told you, $437 billion is where we are, and there is a flat performance that we had last year. There were declines in petroleum export, decline in gems and jewelry export. This is important from prelims point of view. Declines in petroleum and gems and jewelry exports. But what is the good news in it? It means, see, petroleum and gems and jewelry are kind of primary exports that we are doing. Primary not in terms of manufacturing only, but they are initial things. So that means we are now exporting more electronic goods, electrical appliances, and that is some good news on manufacturing exports. Petroleum product का export इसलिए कम हुआ क्योंकि petroleum prices पिछले साल कम हो गए थे. पिछले साल की बात हो रही है ये 24-25. Gems and jewelry का export इसलिए कम हुआ because United States and European Union purchases became slightly lesser due to growth rate not being as much as what they had expected. And if you see, the non-petroleum, non-gems and jewelry exports increased by 7.5% year on year. The petroleum products exports are down, telecom instruments are up, drug formulations and biologicals are up. So we see that now we are diversifying better when it comes to exports. Of course, import composition, we see that the total imports were $721 billion commodity imports, and they were dominated by crude oil. This is our largest import. Gold, second largest import, and petroleum product. So these three things comprise 35% of our total imports. And then the non-petroleum, non-gems and jewelry imports rose. ये भी अच्छा sign है. ये बताता है that India is buying more intermediate inputs and capital goods, which means India's production capacity is rising. We are buying more intermediate inputs and capital goods, which means our production capacity is rising. So that is also a good news. Gold imports were up because of rising prices of gold, no other reason. All right, then of course we can always say, and the merchandise trade deficit has been high in India, $283 billion. Merchandise exports were growing at a lesser rate, 2.4% overall. Merchandise imports increased 5.9%, but we see that trade in merchandise, products, commodities has not been growing at a faster pace. Agricultural exports, now this is important again from prelims point of view. So agricultural exports rose from 34.5 billion to 51.1 billion, faster than overall merchandise exports, in the last 5 years post-COVID pandemic. So if you see in the COVID pandemic year, pre-COVID pandemic year, agricultural exports was 34.5 and it rises to 51.1 by 2025. Even in 2024, it was $48 billion. And here it was $50 billion. So we are consistently touching $50 billion when it comes to agricultural exports. But to be honest to you, India's potential is something like $150–170 billion of agricultural exports if we diversify more towards vegetables, fruits, if we diversify towards spices in a larger sense. India can export much more than what India is doing right now, even fishery products, dairy products. So if India can work on its supply chain in agriculture, India can diversify much more in its exports and our capacity to earn will be higher. Rather, we should try reducing our export of rice, our export of sugar, because these are water guzzling crops. So if we can focus more on suitable crops like spices, like vegetables grown in India, indigenous ones, fruits, and that will give farmers better income capacity. Grape exports from India have picked up very well. In fact, floriculture, flower exports from India has increased from less than $20 million, less than $20 million in 2011 to more than $500 million, $500 million now in 2026. So these are some welcome signs that we are seeing, And as survey also says that despite being world's second largest agricultural producer by value, India's share in global agricultural exports is only 2.2%. So this shows a lot of untapped potential. So now immediately we can target 100 billion exports in agriculture and food processing included in the next 3-4 years. Also, we should not restrict our exports frequently. Rice pe ban laga dete hain, wheat pe ban laga dete hain, onion pe ban laga dete hain. Because when you put a ban, then people become uncertain about your supply side, and then many people may not place their order. Farmers will not get the certainty to grow. So it is important we don't put a lot of pressure here. Rather, we should take it steady, allow commodities to be exported, and ban any export or restrict any export only if we see that there is some kind of trouble. If there is no trouble, why should we ban? Just anticipation should not make us ban exports. Then of course there are tools like buffer stocks, open market sales. इनको use करिए, यही बता रहे हैं सर्वे, rather than banning exports. कि आप बफर स्टॉक्स बनाइए, ओपन मार्केट सेल कीजिए, प्राइस स्टेबलाइजेशन फंड बनाइए, लेकिन एक्सपोर्ट को मत रोकिए. और वैसे ही साथ में एग्रीकल्चरल इंपोर्ट्स भी बढ़ रहे हैं, इकोनॉमिक ग्रोथ के साथ वो बढ़ेंगे. एडिबल ऑयल इंपोर्ट्स आर टचिंग ऑलमोस्ट $15–20 billion नाउ. सो वी विल नीड टू कीप एक्सपोर्ट्स गोइंग हाई टू पे फॉर फार्मर्स इनकम एंड ट्रेड बैलेंस. Then we have trade performance and PLI that we have introduced. This is again an important part. So we see that between 21 and 25, exports registered an average growth of 10.6% and imports around 12.6%, both far higher than global average. And what does that show? What does that show? Shows more integration of Indian economy with the world, more integration of Indian economy with the world. So that is what it shows. Then of course we see now अब ये प्रीलिम्स के लिए इंपॉर्टेंट है, ये ध्यान रखना. हाई एक्सपोर्ट ग्रोथ सेक्टर्स अमंग PLI सेक्टर्स, IT हार्डवेयर, एक्टिव केमिकल सेल्स बैटरीज, इलेक्ट्रॉनिक्स, सोलर फोटोवोल्टाइक सेल्स, स्पेशलिटी स्टील. ये PLI के वो यूनिट्स हैं जो सबसे ज़्यादा एक्सपोर्ट्स को बढ़ने, एक्सपोर्ट जिनमें बढ़ा हुआ पाया गया है. मॉडरेट एक्सपोर्ट ग्रोथ किसमें पाया गया? लेस देन 20% ग्रोथ रेट ऑटोमोबाइल, टेक्सटाइल, फूड प्रोडक्ट्स, फार्मा, मेडिकल डिवाइसेस, व्हाइट गुड्स, APIs and drones. Imports have also been rising, which means we are importing raw material now to India to manufacture more of these commodities. Same thing on the first set of things also. So see, export growth, solar photovoltaic cell, we see there is high enough export growth. And when we look at white goods, pharma, drones, IT hardware, we see export growths relatively positive. Import growth, of course, if we see, तो अब यहाँ देखने को क्या मिलता है, that कुछ सेक्टर्स में एक्सपोर्ट से ज़्यादा इंपोर्ट हो रहा है, जैसे सोलर फोटोवोल्टाइक सेल्स. कुछ सेक्टर्स में एक्सपोर्ट ज़्यादा हो रहा है, इंपोर्ट बहुत कम, जैसे IT, pharma and so on. So again, if you look at it, the average annual export growth has been, if this is the thing, has been pretty high in IT hardware, but then when it comes to the export growth and import growth positive, solar photovoltaic shows some part where it is still not to that extent. Even though it's all in positive domain, there are only few things like telecom is in the negative domain, where export growth is positive, import growth is negative. There is nothing in this domain. Export growth negative कहीं नहीं है, import growth positive नहीं है, यहाँ पर दोनों negative नहीं है. तो मैक्सिमम चीज़ें दोनों ही positive हैं, export growth भी positive, import growth भी positive. This is good, shows growing supply chain. All right, so exports grew 1.5% in telecom, imports fell 18.5%. जैसा मैंने कहा, ये negative zone में imports के है, but otherwise overall when we look at PLI, we see domestic capacity is rising, input dependence is rising, which means imports are used to supply inputs and those inputs are then converted into output and we are able to supply to the world. Also, India's destinations are getting diversified. अमेरिका ने जितना इंडिया पे प्रेशर लगाया, तो उसके बाद क्या हुआ, that our destinations have started diversifying. So exports to US fell by these values, gems and jewelry, marine product, auto component, textile, etc. Everywhere the export to America fell, but the total export in these sectors kept rising, which shows what, except for gems and jewelry. In gems and jewelry, the total exports fell, but otherwise in other sectors, even though export to US decreased, total export increased, which shows we are diversifying now to countries like China. China is now the third largest buyer from India. United States is still number one, followed by UAE and then China. These are the top three purchasers from India. अगर आपसे पूछते हैं prelims में top three export destinations of India, United States, UAE, China. अगर पूछते हैं top three import destinations of India, China, UAE, United States. All right. पिछले साल तक तीसरे नंबर पे एक्सपोर्ट डेस्टिनेशन में नीदरलैंड्स था. इट यूज्ड टू बी USA, UAE, नीदरलैंड्स. दिस ईयर नीदरलैंड्स हैज बीन रिप्लेस्ड बाय चाइना. सो USA, UAE, चाइना. और इंपोर्ट हम कहाँ से करते हैं? चाइना, UAE, United States. That is export import, India's numbers. From prelims point of view, please keep that in mind. Of course, we have seen that gems and jewelries are shifting towards UAE and Hong Kong. ये optional वाले लोग ऐड कर लोगे आपके notes में about how diversification of exports is happening in India. From GS point of view, you can add a couple of these. दो तीन चीजें ऐड कर लो. एक क्वेश्चन पक्का आएगा इस साल on export promotion and all in the mains exam. तो तुम्हें help मिल जाएगा in quoting some case studies as to geographic diversification and product diversification. All right. Import from US has risen. From UAE has risen. Egypt, Nigeria and Libya has risen. Then we see that merchandise exports remain resilient. हमारे merchandise export resilient हैं. India's export basket is still dominated by low and mid complexity product जैसे refined petroleum, gems, rice, generics. तो India world complexity index में 44th पे है अभी भी और वहीं पर टिका हुआ है. मतलब क्या है, हम अभी भी high value exports, good research based exports ये नहीं कर पा रहे हैं बहुत ज़्यादा. तो इसके लिए हमें प्रमोशन पे ध्यान देना पड़ेगा. हाँ, अगर हम कॉम्प्लेक्सिटी आउटलुक इंडेक्स को देखें कि पोटेंशियल किस कंट्री के पास ज़्यादा है हाई वैल्यू एक्सपोर्ट का, वहाँ हमारी रैंक सेकंड है. बिकॉज इट इज़ एक्सपेक्टेड दैट एज इंडिया मैच्योर्स देन मोर इलेक्ट्रॉनिक्स, मोर इलेक्ट्रिकल अप्लायंसेज, एडवांस्ड मशीनरी फॉर फैक्ट्रीज विल ऑल बी मैन्युफैक्चर्ड इन India. So what do we need to make sure we achieve this potential? We need to make sure we do better research and development, we give better infrastructure to people, better skill development to our workers, then only this potential can be achieved. सर्वे कुछ R&D का नाम देते हैं, जैसे अनुसंधान नेशनल रिसर्च फाउंडेशन, RD&I फंड and Make in India and PLI. Of course, as I was telling you, business environment has to be improved, compliance costs have to be reduced, infrastructure has to be improved, and then India can achieve this potential of being one of the biggest suppliers of high value commodities. On FTAs I already told you. इसके अलावा इंडिया ने एक्सपोर्ट प्रमोशन मिशन एक स्टार्ट किया है. This is with a separate budget of 25,000 crore rupees, where government plans to support exporters, and then tariff explorer service on Trade Connect e-platform FTA बेनिफिट के लिए क्रेडिट गारंटी स्कीम्स दे रहे हैं एक्सपोर्टर्स को. तो ये आ जाएंगे ऑन मेजर्स टेकन बाय द गवर्नमेंट टू सपोर्ट एक्सपोर्ट्स. एमएसएमई को लोन मोराटोरियम दिया जा रहा है, क्रेडिट को सपोर्ट किया जा रहा है, सो दैट अमेरिका के जो हिट से हमारा एक्सपोर्ट को हिट लगा था, हाउ डू वी ओवरकम दैट. So we are creating support for MSME through credit moratorium. We are also giving them longer credit tenure through RBI. Credit guarantee scheme is being provided. Tariff Explorer service on Trades Connect e-platform for FTA benefits, so that we can inform our exporters that exactly what kind of tariff benefits you will get in which kind of product, so they can take advantage of the foreign free trade agreements. And then of course we are trying to create this export promotion mission, about which I will teach you in detail in the current affair program. All right. So we are trying to upgrade our export, diversify our export, expand our FTA, reform our regulatory body, and liquidity support to expand our export. तो आप देखिएगा ये important है again. What has India done to promote exports? What combination of policy? Supplier diversification, 1. Upgrading of export quality, 2. Free trade agreement expansion, 3. Regulatory reforms, 4. Liquidity support, 5. Alright, ये बातें आप लिखेंगे that what steps have been taken to overcome Trump's tariff challenge. Then of course pharma sector has given us a very good information. पहले इंडिया फार्मा सेक्टर में एक्सपोर्ट करती थी अंडर प्रोडक्ट पेटेंट रिजीम, उसके बाद प्रोसेस पेटेंट रिजीम, उसके बाद ट्रिप आ गए और ट्रिप्स के अंदर इंडिया को प्रोडक्ट पेटेंट्स डालना पड़ा. तो प्रोसेस पेटेंट में क्या था, दैट यू गेव पेटेंट ऑन प्रोसेसेस, न्यू प्रोसेसेस दैट वर डेवलप्ड, बट ट्रिप्स मेड अ कंपल्शन दैट आपको प्रोडक्ट को पेटेंट करना पड़ेगा एंड ओनली प्रोसेसेस कैन नॉट अलाउ यू टू गेट अ न्यू पेटेंट. सो ऑफ कोर्स इंडिया वाज शॉक्ड by the TRIPS agreement and 20-year of patent requirement. So it was people were worried that we will have contract in the sector. But what we did was we shifted from reverse engineering to R&D led innovation. हमारे फार्मा सेक्टर ने फाइट बैक किया, रिसर्च एंड डेवलपमेंट पे ध्यान दिया, नई चीजें बनाई, कॉम्प्लेक्स जेनेरिक्स, नोवेल ड्रग डिलीवरी सिस्टम्स, न्यू मॉलिक्यूल्स, so that new product itself gets created. It's not the generic of the same product exactly, new product gets created. R&D spending was increased sharply over the period and strength was done in regulatory markets. तो नतीजा क्या हुआ? Due to these factors, even though we signed TRIPS and we entered the global market, yet we see that India could do better, and we see market was, so that was one. Then markets were diversified, we expanded into US and Europe. तो हमने क्या किया, पहले हम इंडिया से एक्सपोर्ट करते थे, अब हमने वहाँ के फूड एंड ड्रग अथॉरिटी की परमिशन लेकर वहीं मैन्युफैक्चर किया, उनके मार्केट्स को रीच किया. सेकेंडली हमने क्या किया, वी रिड्यूस डिपेंडेंस ऑन अ सिंगल मार्केट एंड वी कोलैबोरेटेड विद डिफरेंट एजेंसीज, कंपनीज, सो दैट वी कुड आउट लाइसेंस that particular molecules we can produce. तो ये बहुत ही important है from economic services point of view and from optional economics point of view. Mainly अगर आपसे बोलें that what can be done to overcome global challenge, TRIPS was a major challenge for pharmaceutical. What did they do? First, importantly speaking, they made sure that the capability is upgraded. How did they upgrade the capability? They shifted to R&D, increased their spending on R&D and built strength in regulatory markets. Then what did they do? They made sure that they also diversify the market. Then they allowed collaborative model, adopted out licensing, so that will enable firms to develop molecules during early stages and patenting with partnering with multinationals later. And then contract research was done. That is, you are and manufacturing services. So you are outsourcing your research, and India had a cost advantage, of course, in it, because we had cheaper research facilities, better quality biotech and all, bioengineers and all, and that gave us good enough integration. And then, of course, mergers and acquisitions were used. Using all that, India could make sure that we were the largest suppliers of affordable generics, 20% of global share, and our pharma exports rose from 1.9 billion to 30.5 billion. So TRIPS ne challenge diya, we lived up to that challenge, and what lesson does it show? External shocks can catalyze upgrading, invest in R&D, diversify exports, and use partnerships and consolidation. These are the 4 lessons for Indian companies from the pharma experience that we have had. Then, of course, they come to services trade. As I said, services exports $387.5 billion, imports $198.7 billion. India has a trade surplus in service, $188 billion. You know, this year service trade $304 billion between April to December. Now we see it's around $345 billion. April to February, $365 billion April to February. So we can expect to beat last year very easily. Our service imports are around $190 billion. So the trade surplus will still be there this year, April to February. Now why? So one, our software services are doing better. Our the BPM, business process management, are doing better. Consulting services like, say, technical consulting, accounting consulting, legal consulting is doing better. Financial technology is doing better. So all that is creating growth for services. GCCs have grown tremendously. If you recall, in the first chapter also I was telling you, so India is home to almost 50% of global GCCs, and out of that almost 50% are in Bengaluru alone. So we see GCCs growing at a very fast pace, and they are, you know, the front end offices. We are not the back end offices anymore, and we see that there is strong AI skill base that country is now developing. There is talent availability, cost competitiveness, and SEZ incentives. So we see that software remains dominant, no doubt about that, but the business services are also growing in structure. US is still our top market, but the share is gradually declining, and Europe's share is rising, especially with India-Europe trade pact. I think this trend will continue, that our dependence on US will become lesser and our dependence on Europe will be higher. Of course, the service exports have remained resilient in spite of global volatility. Now when we come to BOP, यहाँ आपको बस इतना याद रखना है that our current account deficit has remained relatively in control, you know, and our capital account inflows have remained stable. So overall, the foreign exchange reserves are present in a comfortable number, but in the last 6 months we have seen that we have had current account deficit, and the capital outflows have also been there, and that is why you will see rupee falling in value, and you will see capital outflows resulting in even the foreign exchange reserves falling. अब कुछ चीजें प्रीलिम्स के लिए याद रखोगे. पहला, our fiscal year 25, we are expecting $135.4 billion of remittances, inflow of remittances, that 3.5% of GDP, and it is greater than FDI. Prelims में यही सब पूछते हैं, FDI का inflow बड़ा है या remittances का inflow बड़ा है. So the FDI inflows are lesser than the remittance inflow. You see, FDI is $80.6 billion, remittances are $135.4 billion. So in that sense, we see that overall there is good enough money coming in, flowing in, and so on. We also see that on commodity trade, we had a deficit of $286 billion, but then when it comes to the inflow of remittances, it's $123 billion net. So that covers a lot of our trade deficit. Plus add to that the service sector trade surplus, which is another around $200 billion, and that means that a little less than $200 billion, but that means our commodity deficit can be covered by remittances and service exports. Of course, on net factor income from abroad, we have a negative, so overall trade balance, current account remains in negatives. But remember, remittances often exceed gross FDI inflows, and so remittances are a more stable source of funding for India than our gross FDI inflows. All right, then, you know, if we see the composition, we see that now GCC dominance is more towards advanced economies. So US is the topmost source of GCCs, UAE followed by that, then UK, then Singapore. Again, prelims के point of view से इसको याद रखोगे that which are the top sources of GCCs, and GCCs mean more skilled workers getting employed, more professionals migrating to India, and that gives India a brain incentive. On capital account, we see FDI, portfolio flows and external borrowings are showing that they are financing India's trade deficit. If we look at global FDI trends, we see that global FDI fell by 11%. अब आप सोचिए, when the global FDI is falling consecutively, if India is recording any positive in FDI, that's good news. It means that we are still resilient and we are getting some positive return. In Europe, it is minus 58%, China minus 29%. In developing economies, it has been at around $867 billion of global FDI, 57%. And it has shown a modest decline, but however, India shows some resilience there. Now, so we see that why is the FDI declining globally? That becomes a question. So we see that one, in renewable energy and power, the decline is pronounced because again, as we said, friendshoring, nearshoring, countries are worried about investing far off, also what can be nationalized, etc. Another is that developed countries are themselves in trouble. GDP is not rising as much, and most of the governments are trying to locate industry in their country. So FDI is falling from developed countries, manufacturing projects are not happening. US is resilient mainly because of AI-based investments. If AI-based investment is removed, US resilience will look lesser. Then of course we see trends in investment flows to India. So if we look at gross cross-border inflows, were 18.5% of GDP in 25 and 16.9% in first half of 26. So the net FDI to India fell only to 2% in calendar year 2024, but still India has been one of the largest recipient in South Asia, ahead of Indonesia and Vietnam. But important thing is, this has happened, as I told you, if you recall in an earlier lecture also, first chapter, that this shows maturing of Indian market, that if net FDI to India is falling, it's because people can come out of India, sell their product, the initial public offers can be monetized, and that is also resulting in net outflow from India. Also, it is important that net outflow is happening from India because global markets are in a turmoil. So people are worried about uncertainty and not many want to keep their money in an emerging market. Of course, then greenfield announcements are there, and our greenfield ka matlab naya announcements, new projects. We are ahead of Malaysia, Singapore, Vietnam and China, and we are the largest destination of greenfield investments, that is India. So we have some good investor sentiment, but then the world has created its own issue. These figures are important. $81 billion of gross FDI inflow, 13% year on year, and major sectors: services 1, software hardware 2, trading 3, renewable energy 4, construction 5, automobile 6. अब याद रखेंगे, software has the largest FDI inflow, then of course trading, then renewable energy, and then construction and automobile. Manufacturing sector में automobile is the largest recipient, all other belong to service sector category. Industry में construction is the largest recipient, followed by automobile. These are purely services. Then of course we talk about inflows. April to November it has been $64.7 billion. We will get the final figure in March 31st, so I will inform you on that. Net FDI, as the survey says, has been falling, and net FDI was $0.8 billion last year. This year, April to November, it is $5.6 billion, and that is because FDI outflows have been pretty high, and that outflow has been high because companies are making profit and shifting their capital gains abroad. एक चीज जो हम थोड़ा ठीक कर सकते हैं FPI के लिए, वो ये है कि हम शॉर्ट टर्म कैपिटल गेन्स टैक्स को थोड़ा कम करें और लॉन्ग टर्म कैपिटल गेन्स टैक्स को तो काफ़ी कम करें, तो उससे हमारा FPI पोर्टफोलियो इन्वेस्टमेंट बेटर होगा. Of course, Indian firms are also investing abroad. That is also happening. It is not that only foreigners are taking their money away. So that's another reason why net FDI looks small. Then, so this is the flow. Again, I've just given it to you in a chart form. Will make it easier for you to remember. Then, another is that the direct investment income as a ratio of inward FDI stock, we see that enough is seen. India's average FDI return has been pretty high, 7.3%. Another reason why people are shifting their money abroad, and similarly, and pretty high compared to Thailand, Brazil, Mexico, etc. Also for major advanced economies, they didn't earn as much as what India was giving as earning. So overall, if you see, India offers high and stable returns. So you see a lot of inflow of FDI and we see a lot of outflow of FDI. It is good news. शॉर्ट टर्म में पैनिक करते हैं लोग कि FDI कम हो रहा है, गड़बड़ हो जाएगी, पर ये अच्छा समाचार है क्योंकि फिर लोगों को जब कॉन्फिडेंस होगा कि इस मार्केट से निकला आराम से जा सकता है तो फिर वो उस मार्केट में ज़्यादा इन्वेस्ट करते हैं. When people are confident that I can leave the market more easily, then they enter the market much better. Then of course when we go further, but हाँ एक बात है, others are competing with us, whether it is Vietnam, whether it is Malaysia, Thailand, they are giving easier rules, ease of doing business, compliance is being reduced, fast track approvals, creating industrial parks. So if India wants to continue being one of the larger recipient, India will have to learn to compete with these countries. So that is what I have given you in this box. ये जो मैं आपको बता रहा था ये बहुत important है, that what is India's FDI challenge, that you know other international countries are trying to attract FDI by various programs, R&D support, talent support, investment led approvals and so on, but in India we are not doing it. So I think India should now become more mature and try taking government level coordination and make sure that faster approvals are given, unnecessarily quality control orders are removed, import tariffs are reduced, and we allow ease of doing business so that more and more FDI can come to India. All right. सर्वे कहते हैं पॉलिसी डायरेक्शन क्या है, आइडेंटिफाई प्रायोरिटी सेक्टर्स एंड जीवीसी एंकरिंग फर्म्स, जो ग्लोबल वैल्यू चेन को सपोर्ट करते हैं उन फर्म्स को आइडेंटिफाई करिए, उन्हें रीच करिए, कम एंड इन्वेस्ट इन माय कंट्री. एंड प्रायोरिटी सेक्टर्स देखिए कौन से सेक्टर्स हैं जहां हमें कंपैरेटिव एडवांटेज है. सो वेरेवर वी हैव अ कंपैरेटिव एडवांटेज वी विल डेफिनेटली अट्रैक्ट more people. Then of course there is engaging directly with MNCs. Talk to them, give them incentives, tell them that okay, this is ease. What do you need? Do you need a plug and play approach? कि आप आएं और आपके लिए infrastructure हो, आप आगे शुरू करें. So if we can do that, ask our companies, why are you going abroad? What benefit do you think India can give you? And that can promote a lot of more investments in India, because private investment is a worrying trend in India, which we all have been noticing. Of course, institutional strengthening is very important. A centrally empowered task force has to be created for interministerial interstate coordination, और एक जगह पे accountability होनी चाहिए large investment की, single window kind of, so that there is no running off from pillar to post. And policy should be credible. आप फिर से ध्यान रखिए, मैं आपको repeat कर देता हूँ, इंडिया को क्या क्या करना है. Policy directions, strategic targeting, institutional strengthening, all right. Then policy credibility, predictable ho policy, don't change them, don't bring up retrospective tax and all. Stable ho policies, don't frequently bring unnecessary changes if not needed. Similarly, incentives must be reliably implemented. ऐसा ना हो कि आपने incentive दे दिया और बाद में फिर वो benefit firm तक पहुंचा ही नहीं. Then automatically people will stop trusting you. Then of course, improve investment ecosystem. That is the fourth thing. Regulations should be simplified, approvals should be faster, logistic costs should be reduced, infrastructure should be built up, and workforce skills should be built up. And then use global agreement like bilateral investment treaty and EFTA, TEPA, this has a $100 billion commitment of investment, India-UK trade agreement, to make sure that our market size, our growth, our demand capacity, our capacity to serve for a longer period, our macroeconomic stability in terms of less fiscal deficit, less inflation, can attract foreigners to come and invest in India. This can be a full-fledged question in mains. What are the challenges of FDI in India and how those challenges can be removed, or critically analyze the reason why net FDI inflow has been declining in India, or gross FDI inflow has not grown at a faster pace. What can be done to increase it? So from mains point of view, a full-fledged answer in the last 4 or 5 slides that you can get. अब ये जो outward FDI है, ये इसलिए होता है कि जैसे जैसे हम ग्लोबल वैल्यू चेन में इंटीग्रेट करेंगे, as we integrate, automatically people will bring things into India and take things out from India. So we see that developing countries have become a major source of outward investment, with their share in global FDI outflow rising from 7% to 30%. If you see, developing economies are gradually rising, developed economies are gradually falling. So that is something that we see, and that is why outflow from India should not be a worrying signal. Why does outflow happen? It gives us financial gain so that profit and dividends can be given to domestic shareholders also. Repatriation of profit can be done overseas, which will bring in dollar into India. Technology and knowledge transfer will happen, which will mean intangible benefits will happen to us because we will get exposed to advanced technology, we will get accessibility to better quality management practices, and that will allow our companies to reach global standards, and market access will achieve from global market, which will expand the capacity of the companies to sell and produce more. So overall, again, it depends on if my companies are efficient and if foreigners can absorb them and my companies can do well within my own country and they do better outside, then automatically India gains much better. So overall, if you ask me, outflow of FDI becomes a challenge only when FDI is flowing out because of lack of domestic opportunity. If there is domestic opportunity but FDI is flowing out to diversify itself and make itself relatively more efficient, then I think it is not such a major challenge and we should not be resisting FDI outflow, you know. So overall, it's not such a worrying signal. All right, then we see India's experience. So we see that outward investment by Indian firms has generally complemented rather than reduced domestic investment. This is a good signal. कि हमारे domestic firms इंडिया में भी अच्छा कर रहे हैं, बाहर भी ले जा रहे हैं, तो complement कर रहे हैं एक दूसरे को. Also, firms investing abroad often expand exports, strengthen supply chains, and increase R&D at home. So these are two good trends on India's experience on FDI flow abroad. India's outward FDI has flown from 14.4 to 23.6 billion. One thing we should be a little worried about is that because we have reduced profit opportunities in India with a lot of taxation burden on the firms, it is possible some firms are taking advantage of tax arbitrage and shifting to low tax countries to make more profit. So I think there we should be a little careful. Otherwise, we are a good enough investor, recipient also of global investment. We are now also a supplier of global investment. तो जैसे जैसे हमारा देश आगे बढ़ेगा, धीरे धीरे ऐसा जरूर होगा कि हमारे फर्म्स बाहर जाएंगे, वहाँ से टेक्नोलॉजी सीखेंगे, बिजनेस प्रैक्टिसेस सीखेंगे, मैनेजरियल प्रैक्टिसेस सीखेंगे, एक्सपोर्ट बढ़ाएंगे. There's no harm, but again the reason is important why they are going. Now we come to FPI. So we see India's FPI flows are cyclical and sensitive to global financial condition. जैसे 2008 में क्राइसिस हुआ, हमारे FPI नीचे चले गए. 2013 का टेपर टैंट्रम हुआ, हमारे FPI नीचे चले गए. टेपर टैंट्रम क्या था? American Central Bank announced they are reducing money supply. So all investors who had invested money in emerging markets like India, Turkey, China, Argentina, Brazil, South Africa, they started pulling out. And that resulted in massive shock to share market of these countries, including India, and currency flew drastically and so on. Then 2018 tightening cycle, inflation बढ़ा developed countries में, interest rate बढ़ा, इंटरेस्ट रेट बढ़ने से लोगों ने फिर अगेन इन्वेस्टमेंट शिफ्ट किया आउटसाइड. देन पैंडेमिक. तो हम देखते हैं जब जब ग्लोबल इन्वेस्टमेंट में दिक्कत आती है, हमारे यहाँ भी दिक्कत आती है. अभी भी ड्यू टू वॉर, ड्यू टू ट्रम्प्स टैरिफ अनसर्टेनिटी, हमें दिक्कत देखना पड़ रहा है इन एफपीआई. सो सर्वे सेज इट्स साइक्लिकल. व्हेन थिंग्स आर गुड, इंडिया रिसीव्स अ गुड इनफ इन्वेस्टमेंट. थिंग्स आर बैड, इंडिया लूजेस इट. सो द न्यूज फॉर इन्वेस्टर्स इन इंडिया देन इज, if you are planning to invest long term, no need to panic with share market going down or bonds not doing so well, because in the long term India has shown resilience. The growth has been positive and very positive. Yes, if it is short term, if you are investing for a couple of years, this will be a volatile market. Any gold, crypto, any asset market will be very volatile till Donald Trump is around, so be prepared on that. Then of course we see that in India most of the period equity flows dominate. ज़्यादातर इक्विटी आता है, डेट उतना नहीं आता. ये भी प्रीलिम्स के पॉइंट ऑफ व्यू से याद रखोगे. ऑलराइट, कि डेट फ्लोज इस बात पे डिपेंडेंट है कि ग्लोबल इंटरेस्ट रेट कैसा शो कर रहे हैं, बट इक्विटी फ्लो तो ट्रिमेंडसली इंडिया में आता रहता है. साथ में schemes like voluntary retention route and fully accessible route have helped stabilize debt inflows. Alright, so we have had particular schemes like voluntary retention route. If you want, you can retain your interest and bonds and we will not let the price fluctuate. We'll give you a fixed return. Or fully accessible route where you can bring any amount of money. So all that has helped India in getting some debt flows, but majorly it has been equity. And that is why you will see when US Treasury yields rise, when gold prices rise, our equity outflow happens, our markets decline, and we will see also Indian markets are already at a very high rate at 85,000 odd Sensex. So many share values were overpriced. That also resulted in outflow of FPI from India. But overall, long term, it remains, quite positive if you ask me. India's foreign exchange reserves have been hovering around $700 billion. $720 billion is India's foreign exchange reserve on 15th March. 2026, and that is after RBI sold $12 billion to keep rupee stable. We have more than 1 year of import capacity, so I think India is doing pretty okay. We have around 100% of external debt that we have taken. So India's foreign exchange reserves are stable, not major issue over there. Majorly it is foreign currency assets, but they have declined and gold has increased. ये trend याद रखोगे prelims के point of view से. Foreign currency asset जैसे foreign bonds, foreign money, they have declined and gold has increased. SDR has remained stable. तो prelims के point of view से again ये figures याद रखना है हमें. ये composition का मैंने आपको एक chart भी दे रखा है और आप देखेंगे that from in 2010 we were around slightly less than $300 billion and we have grown and we have reached $700 billion plus. And we have been in this range. If you see from 2024 onwards, we have been in the range of $600 billion plus continuously. And we are then one of the largest foreign exchange reserves holders in the world. Of course, China has the largest foreign exchange reserves, followed by Japan, Switzerland, Saudi Arabia, and then India. So we have had some decent foreign exchange reserves being held. Then we see that Indian rupee has depreciated, but that of course, as I already told you, that some rupee has corrected itself, FDI outflows have happened, and also because of the uncertainty in the global market that people have shifted their money abroad. So we see that rupee movement depends on trade, not only on current account deficit but also on कैपिटल इन्फ्लोज. तो जब भी कैपिटल इन्फ्लोज ज़्यादा होता है रुपया डिप्रिशिएट करता है. लेकिन मैं फिर एक बात कहूँगा, शक्तिकांत दास जी के एंड के टेन्योर में लास्ट एक साल में आई थिंक इन 2023-24 he didn't allow rupee to depreciate. So on real effective exchange rate, rupee had appreciated a lot. So some part of depreciation of rupee till 90-91 rupees per dollar was simply a correction of rear. Now after 91 rupees per dollar, when we reach 93-94, that's because of Iran-Israel war, that's because of global uncertainty, Trump's tariff, and India's own position slightly heckled with shortage of energy. So I think all that has resulted in current rupee depreciation. I expect rupee to stabilize around 91-92 rupees to a dollar in the longer run, in another 6 months or so. Then of course we see that exchange rate has its own trade and financial channel. So if weaker rupee happens, it improves India's trade balance. ये हमेशा मैं आपको क्लास में भी समझाता हूँ कि रुपया के डिप्रिशिएट होने से हमने देखा कि हमारे एक्सपोर्ट ज़्यादा बढ़ते हैं, इंपोर्ट्स कम बढ़ते हैं. तो उस केस में our trade balance improves. Also mercantile trade is highly sensitive to exchange rate changes. The net total trade deficit declines. The trade declines by 1.26%. Service trade is less sensitive because it is based more on efficiency. In financial channel, we see if rupee is strong, temporarily foreign capital can come in, because investors become confident, but effect is short-lived. People rush away when they see rupee depreciating later on. It is important that if rupee is depreciated, my capital flows become higher later on, because rupee, then it is cheaper to buy investments in India. So what we see overall is that a depreciating rupee is not a major threat to India's development story. Then we see that when it comes to financing of current account deficit, so we see capital inflows finance, especially FDI finances current account deficit. And if advanced economies have large interest rate, then we have a challenge, because then people immediately shift their money to advanced economy and our capital inflow dip, and rupee also depreciates due to that. So if we want long-term currency to be strengthened, we will have to focus on high domestic saving and current account surplus, for a very simple reason. If current account is in surplus, our requirement of global money will be lesser. There will be more demand of domestic money, and that will mean by global people, and that will mean more demand for rupee. And if we save more, that will mean that overall risk of investing in India will be less, because our stock market, our bond market backed by domestic savings will be giving higher returns. So high savings give higher returns. If the current account deficit is low, the premium on investing in India, risk premium, will be low, so more people will choose India. So high savings and low current account deficit become a structural reason why countries choose such investment destination. So manufacturing exports become very important, because if we export good manufacturing, automatically we become an important part of global supply chain, which then means more and more people start getting attracted towards India. Also, better manufacturing exports means that better supply chain develops within the country. So we become exporters of not only finished goods, we also become exporters of raw material, that is intermediate goods, and that makes rupee take better value. So if we want rupee to do well, our exports of merchandise should do well, current account deficit should be lesser, savings value should be higher. Now, how do you make yourself efficient? We make our innovation and R&D better. So if we can improve innovation, improve productivity gains, automatically my products become more demanded, better in quality, less in cost, and that attracts more and more global investors to India. That attracts more and more exports from India, and that then gets rupee and a stable value. Similarly, if we use FDI, they are important, of course, because they will bring technology, they will connect us to global value chain. Portfolio inflow or outflow doesn't make a long-term impact because portfolio cyclically correct themselves. So कभी portfolio investment ज़्यादा होगा, कभी कम होगा, but अगर direct investment की बात करें, जब भी ज़्यादा होगा, currency stable दिखी है. ये economic survey ने अपने box में हमें बताया है. So we see that in the short run, exchange rates are affected by capital flows and investor sentiment, but a stable medium run exchange rate is based on good quality commodity export, good research and development and innovation, good quality presence in global value chain, good FDI inflow, and that gives us a good balance overall. And East Asia gives us that lesson that if we see South Korea, Taiwan, Japan, recently China, so more they are integrated to global value chain, more we see their currency stable, more we see their balance of payment in balance, they don't face a macroeconomic crisis, even when global system has a crisis. So we see that the currency credibility high, has strong economic fundamentals, manufacturing exports create better growth, and then global value chains support you. Of course, balance of payment is stable, so foreign investors also like you because they know that the fluctuations will be less. And industrial policy was selective and performance based. Government ने उन sectors को support किया जहां वो confident थे कि अच्छा करेंगी. साथ में उन पे condition रखा कि आप export बढ़ाइए. If you can compete with the best in the global world, we will support you. So in India also, these are lessons we can keep in mind, that currency credibility should be established, manufacturing exports should be promoted, integrate ourselves in global value chain by reducing import duty, by promoting R&D, improving ease of doing business, stabilize balance of payment by promoting exports, and give industrial support, but don't protect inefficient ones. Input industries should be carefully treated like steel, petrochemicals, etc. to make sure that later on you don't see a sudden shortage of input and you have regular supply. And then invest in your technology, R&D, infrastructure to make your capability for export regular. Manufacturing exports strengthen currency credibility gradually. And over time, strong exports led to external surpluses, reserve accumulation, and then global portfolio investors were also confident that I will not lose money over here. Only relying on service exports won't help because service exports do not have as much global as internal domestic chain as what merchandise export creates. So service export कभी-कभी foreign based रह जाता है ज़्यादा और बहुत ज़्यादा employment या internal stability पे उतना नहीं focus कर पाता जितने merchandise export कर सकते हैं. Then survey says that if we look at international payment position, Japan is the world's largest creditor now, and Japan से ऊपर चले गए, और Germany and China remain one of the largest creditors of the world. USA is the largest debtor of the world. But एक बात ध्यान रखिए, भले ही इंडिया का ये नंबर हमें टॉप 10 में लाता है -0.3, but if you take size of Indian economy, $4 trillion, and if you take size of Poland, Turkey, Greece, Australia, etc., you will realize that this 0.3 is far lesser in percentage terms. So on debt part, we should not be worried. मैं और clear कर देता हूँ इसे. 0.3 ट्रिलियन का डेट है हमारा, मतलब $30 बिलियन का डेट है नेट. जितना हमने दुनिया को दिया, जितना हमने दुनिया से लिया, ये कोई बहुत डेंजरस सिचुएशन नहीं है, गिवन वी हैव अ फॉरेन एक्सचेंज रिजर्व्स मच हायर एंड गिवन दैट वी आर अ स्टेबल इकोनॉमिक सिस्टम. So India is the 11th largest debtor economy with a negative net of 0.3 trillion. But as I told you, I don't see it as a major trouble part, you know. And India's foreign currency reserves are growing much faster than the growth of debt. In fact, asset liability ratio is rising and the NIIP GDP ratio is improving. So overall, if you ask me, we are in a basic good condition. The global external debt has reached 104 trillion. This is trouble, because global GDP is also 105 trillion, So we are almost reaching 100% global debt to GDP, which is worrying, because remember, any challenge like US-Iran war dragging for long, or any supply chain challenge, or China entering Taiwan, massive bloodshed in the financial market will happen, because everybody will try taking their money out and collapse. So I think the governments globally should develop a consensus, should cut down on their borrowings, can increase some tax rates, but focus on GDP growth and focus on uplifting the poor rather than making them more and more dependent on government doles. So if we can do that, maybe that can help us much better. India is ranking 21st globally with $718 billion external debt in 2024. Sustainability of debt is decent in India. India's debt to GDP is 18.4% externally, which is very low, and government accounts for much lesser of this. So government external debt of the government is not even 3% of GDP. So India is in a decent shape over there. The debt is rising throughout. Debt to GDP ratio is constant, but the external debt, as I told you, forms less than 5% of total government debt. So India is quite stable on the debt platform. In conclusion, survey says that global economy is becoming fragmented, trade growth is becoming slower, competition for global capital is rising, but India's external sector has shown resilience. Imports have shown growth, but capital inflows have been stable. So India's balance of payment shows stability. Our export competitiveness is rising. Service exports are doing well. So overall, if we assess India, externally we look in good shape. Thank you, all of you, for continuously supporting me. We will be coming up with the next session pretty soon, hopefully tomorrow itself. So you finish this and agriculture will be the next topic we will discuss. Thank you. God bless you all.